Hi, it's Nero here from Investment Rise, and if you're watching this video, you're probably wondering what's in store for our various property markets in 2020. I mean, 2019 was a real roller coaster year, right? When the year started, we had people making all sorts of diabolical predictions, such as these. Check these out.
The end of Australia's property boom time.
Party's over.
It's definitely over, and it's going to be over for quite some time.
Prices are set to take a beating, with analysts forecasting a dramatic drop in property values right across the country. Are we going to see more drops in 2019?
I think it's inevitable, isn't it, really? I mean, you just, common sense.
But then by the end of 2019, some of the very same people had changed their market predictions, like you can see here.
Sydney home prices are back in town. In the past 3 months, house prices are 5.3% higher.
But economists say we're once again on the up. House prices set to soar and affordability becoming a bigger problem than ever before.
So the question is, how did so many respected property experts, so many respected economists get it so wrong? I mean, even we had some people at the start of 2019 coming out and predicting a market crash with price falls of around 40% in the Sydney and Melbourne markets. I mean, they couldn't have been more wrong. Myself, I predicted at the start of 2019 a slight property price decline in Sydney and Melbourne markets. And up until about halfway through 2019, my predictions were exactly on track. So what changed? What was the one thing that caused so many people with experience in property to get their predictions wrong? And it was this. At the start of 2019, everyone expected interest rates to rise. But in the middle of 2019, what happened? The Reserve Bank of Australia completely flipped its changed tack, and instead started dropping interest rates. And so what happened? As a result of the cheaper interest rates, more people started to get back into the market. People who couldn't afford prices before started to get back in the market. And our major cities especially started to turn around, especially Sydney, Melbourne, and of course Brisbane as well. But the question is then, what does that mean for 2020? Right? I mean, if someone like myself, I started making market predictions back in 2010, and 2019 was the first time I got it wrong. Okay, so I predicted, for example, when the market was going to fall in Sydney and Melbourne, when nobody agreed with me and criticised me heavily. I predicted the start of Sydney property boom even back in 2011, before almost anybody else did, and again got criticised heavily. So I've been able to track market prices very well, but no one's got a crystal ball. So the question then is, could I be wrong again? Maybe, but let's look at some of the fundamentals, right? Because no one has a crystal ball, and what I'm about to share with you are based on my 17 years, now 18 years of investment experience, my over 10 years of helping people purchase now well over $66 million worth of investment property. Let's look at the one key factor driving prices up, and it's interest rate drops, right? It's not as if there's this huge increase in demand because our population is growing, especially in Sydney and Melbourne. I mean, in fact, in Sydney at the moment, we're still losing a lot of people to domestic migration. Brisbane has right now the highest rate of domestic migration, whereas Sydney and Melbourne have the highest rates of overseas migration. So people are coming from overseas to Sydney and Melbourne, but then many people are leaving our two most expensive cities. And why are they leaving? Well, because prices are often too expensive. So if prices are now rising in Sydney and Melbourne, the question is, well, what does that mean for you if you're looking to buy an investment property? Well, here's what I think is going to happen in 2020. Yes, prices will increase in our three biggest cities, Sydney, Melbourne, and Brisbane. I believe Hobart will have a bit of a rise. Adelaide will also have a bit of a rise. Darwin and Perth, still very weak, still depressed. I mean, Perth, for example, prices in 2020 are still less than where they were. The median price point is less than where it was back in 2010. All right, so it's been depressed for a long time. Sure, they've had a few short-term price increases, but then those prices have fallen back again. So the Perth market will eventually come right, but do I think 2020 is the year? No, I don't at all. So I think the Perth market will remain depressed. I think the Darwin market will continue to struggle. I think the markets have the best potential for capital growth are going to be your bigger capital cities. However, in Sydney and Melbourne, what I think is going to happen is that the price rises will continue until towards the end of 2020. Why? Because as I said earlier on in this video, the only thing driving price rises is interest rate cuts. And the Reserve Bank of Australia, if you can believe what they're saying in their reports, they have said that they're going to give us all a maximum of 2 interest rate drops. When the interest rate cutting stops, when we get to a point when the Reserve Bank of Australia says no more rate drops, that's it, the question then is, well, what's going to keep supporting our market? What's going to keep driving our markets forward, especially our 2 most expensive cities being Sydney and Melbourne? Okay, I think you'll see prices rise towards the end of this year, but then start to flatten out. Now, I do not expect what happened last time the Reserve Bank of Australia stopped cutting rates. So in 2016, they cut rates, which reinvigorated our property markets. But then in 2017, prices start to fall, and we had 18 months to 2 years of some significant price declines. I do not expect that to happen this time, and here's why. The price drops last time were driven because of bank lending restrictions, APRA coming in, and as with often any sort of intervention, they overshot the mark. They made it too difficult for people to borrow, and so really buyers were really being hamstrung, especially property investors, and so therefore the market started to fall because the lenders literally prevented as many people to buy property that wanted to. We now know that even the banks have admitted they overshot the mark. APRA said, yep, probably too much, and they're easing back on their lending restrictions. So if the lending restrictions are no longer going to be in force, or at least it's no longer going to be as stringent as it was between 2017 and 2019, what I think will happen is that once the price rises finish in Sydney and Melbourne, which I expect will be towards the end of this year, you're going to see a long period of prices just going flat with marginal increases maybe due to inflation, but nothing really. All right. This goes back to what we saw in the Sydney market between about 2004 to 2011, where prices essentially stayed the same. All right. So if you're looking to invest in property, the question is then, well, if the markets are all expected to rise at least in 2020, where should you look to invest? And that really comes down to your strategy and your price point. If, for example, you just want to buy one property, you're not interested in the cash flow, you want to buy in a suburb that you want to buy at obviously a price point that's affordable to you, you could almost buy anything in any capital city and you're likely to do okay. And that I mentioned is the capital cities that I've already mentioned rather. However, if you're looking to build a property portfolio that can sustain you in retirement, that can maybe help you pay your mortgage off more quickly, so it can help increase your financial wealth, then you need to be a lot more strategic. You need to start looking at properties in areas where not only is there good growth potential, but where the rental yields are strong so that you're not out of pocket each and every month. Because if you keep buying properties that are negatively cash flowed, if you keep buying properties that you've got to feed each and every month, if something happens to the economy and as a result you lose your job or something happens to your job, you're going to be in a real struggle, right? It's going to be a struggle for you to keep affording those properties, okay? So you need to be clear on your strategy. If you're looking for properties certainly under $1 million, stick to houses. Look at the capital cities where you can get houses for under $1 million, where the rents are going to cover the mortgage. If you look at the capital cities that I mentioned, you're not going to get it in Sydney or Melbourne. You're going to have to look at some of the smaller capital cities. And then when you look at that, you need to ask yourself, well, where should you go, especially if you don't know those markets? And the question to ask is, well, which of the smaller capital cities haven't had a huge price rise over the last 10 years? Which of the capital cities are more affordable for locals? Which of the capital cities have a large increase in population, so demand is greater than supply? Which of the capital cities have the largest infrastructure spend and jobs growth? If you can start asking yourself those questions, you'll start to find more strategic opportunities. You'll start to find the opportunities where there is good potential for growth, but also where the rental yields are going to be strong so that you're not out of pocket each and every month, so then you can use that first property to then build on to get the next property and the next property. I really believe that in 2020 going forward, in this new decade, the speculative investor, the investor who invests because they think they should invest, because their friends are investing, or they think it's a good idea, they're going to do okay, but they're going to end up down the track going, oh God, I wish I'd been more strategic. I think if you're serious about using property as a vehicle to create wealth, you need to really start being more strategic. Yes, it's a very good news story for most of our property markets, but that doesn't mean you can just throw a rock and buy wherever it lands. You need to really think it through. You need to make sure you're getting the right guidance, you're applying the right strategies, and if you do, I really believe that 2020 could be the start of some really prosperous years for the strategic property investor. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to nerocall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a free half-hour phone consult with me personally. Either way, thanks again for watching.